Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business developments, their context, their relevance and policy impact. I'm Govindraj Ethiraj. India's wholesale price inflation levels have risen to a more than 3-year high of 6.55% in February from 5.25% in January. Consumer price inflation, which directly relates to your daily purchases, on the other hand, has risen to 3.65% in February compared to 3.17% in January. Now, while inflation levels might moderate, there are now increasing concerns that other factors might begin to hurt prices and interest rates that the common man or Aam Aadmi has to pay for loans. For one, early reports are suggesting that thanks to El Nino weather phenomenon, the monsoons this year might not be as good as last year's, which could hurt the economy in the second half of the year. Second, commodity prices might start going up, which too will affect our cost of living. To understand these multiple factors at play and what could affect the outlook for both interest rates and life for the Aam Aadmi in coming months, I'm joined by Madan Sabnavis, Chief Economist at CARE Ratings, and Brinda Jagidar, also economist. Thank you both for joining me. Brinda, let me begin with you. So, Holi is over. That means seasons have changed. New season is beginning. What does that mean? I mean, I don't mean Holi specifically, but what do all these numbers mean for the economy in coming months?
You know, rightly, now the CPI and the WPI, they're both sort of merging and moving the same direction. And it's clearly showing that inflation is going to trend up. So I think that is something we should be prepared for. Where is this coming from? A lot of it is coming from food inflation, whether it is in the CPI or whether it's in the WPI. It is the food component that is pushing up prices. Interestingly, the manufactured component has actually shown softening. So which means that it's the input prices that are really pushing up the inflation, and output is yet to really catch up. Right now, perhaps the manufacturers are looking at demand, which is yet to pick up substantially after remonetization. Right. And so they haven't really, their profit margins are taking a hit. But then going forward, even that will start to rise up. So I think we're prepared for higher inflation going on.
So, Madan, Brinda says we should be prepared for higher inflation. So, is it prepare or is it worry?
No, I don't think it's worry right now, because I think when I look at the inflation numbers, I think it's fairly dualistic in nature. Because when you look at the headline number of CPI, which is what is going to concern RBI when it comes to policy, because they've decided to target the CPI inflation number, it remains to be fairly stable at 3.6%, much below the 4% or the 5% mark which we're talking of. So I don't think that's a concern from the point of view of monetary policy. And in terms of the WPI, the feeling which I get is that some part of the pricing power which industry had lost earlier has been regained, because if you look at the overall composition of the WPI and see where these increases are coming from, it's not really coming from the food side, it's coming from the non-food component, the fuel component. Now, one is actually being directed by the government, the other one, like if you're looking at minerals or looking at fibers, it doesn't really enter the CPI basket. So what you mentioned, Govind, in the beginning about El Nino or commodity prices hardening, I think one needs to wait and see whether these things really do happen or not. Because if you remember sometime back when we discussed oil prices, we all spoke of $60, $65 for a barrel, but today it's come down to less than $50 per barrel. So we're not quite sure how global commodity prices are going to behave. So as of now, I think we have to look at inflation more in terms of which components are going to put the pressure on policy making, rather than the headline numbers, because to my mind, the headline number, one looks good, one doesn't look too good, but what doesn't look too good is good for the manufacturers.
Okay, but then the other point is really to do with monsoons, right? So we are seeing some early warnings on El Nino and whether that could have a potential impact on the way monsoons pan out in this season. How does that look to you?
No, see, I think it's a bit too early for us to judge. Now, it has been said that there is a development of El Nino in something which could have an impact on the monsoons. But there are also other reports saying that it's definitely not going to lead to any kind of a disastrous situation. So I think we'll have to wait for May or so. I think that's the first time, that's the first estimate of the monsoon which we really get, first projection as such of the monsoon which comes in, which will give us a clearer idea about whether this is an imminent threat or not. But what we have seen is that even though we've had a very good monsoon, if I look at the WPI, also look at the CPI and look at things like rice and wheat, where production levels have been very good, we have seen that the inflation numbers are fairly high. So I think there's some kind of a divorce which is taking place between production numbers and the price increases, as well as the monsoon impact. So I think we should be a bit guarded when we're talking of the monsoon. It's a bit too premature to jump to any conclusion that it's going to have a major impact on the inflation indices.
The only reason I'm asking is, and let me put that question to Brinda. So, if we feel that, for instance, there might be a hit on the agriculture sector, if we feel that there could be problem on the supply side, obviously interest rate is something that you want to work with much ahead. What's your sense?
Absolutely. So that is what I think RBI has also done. And now when we look back, it becomes much clearer what actually they were planning. On agriculture, I would continue to worry because it could be a serious disrupting factor. So one is what happens to the food prices. Second, as you rightly mentioned, the commodity prices which are going up globally. And the third I would add is a strong dollar.
Except oil, yeah.
Yeah, of course. And like metal, manganese, copper, all these ores and minerals, they're all going up. And fuel also is, it could go either way. Fuel unlikely to go down very much because the global economy is picking up. And remember, the Fed has also raised rates because they feel that inflation is going up. So globally, inflation going up, and the dollar becoming stronger. So these two would actually also push up our import costs.
Right.
So that would add to inflation.
Right. So, but then let me put the question differently. So what does this mean from a cost of living point of view? I mean, when I say cost of living, I mean the interest rates I pay on loans, the price that I pay for buying vegetables, fruits, groceries for my daily existence.
So in terms of my cost of living, in terms of what I'm going to be spending in my food basket, I don't think there is any concern right now because I think the way in which prices have moved, some are going up, some are coming down, but on balance, if I'm talking of something in the region of around 2%, it definitely doesn't seem to be a major cause of worry for us. But if you look at the so-called non-core non-core inflation within the CPI basket, there are definitely signs that we have still been in the region of around 4.5 to 5.5% for various categories. So that's something which is definitely affecting the common man. So the concern will be more on the non-food side rather than on the food side. But I think here the government also has a role to play because even though the crude oil price comes down, we haven't seen the price of petrol, diesel and other fuel products coming down. So I think the government has made up by pushing up its own revenue rather than giving any kind of relief on prices. And in terms of interest rates, I think I still think that if things play out well, there could still be an interest rate cut during the course of the year, though definitely not in April. So if I'm a kind of a home buyer or something, if you're linked directly to say what the interest rates are likely to be, I think one could pause for a little while to hope to see how these numbers really work out before you take a decision on interest rates, because I still think there is room for a rate cut if the rainfall and the food prices behave in the normal manner.
Sorry, Madan, you said so there is room for a rate cut?
Absolutely. There's a room for a rate cut because I really don't see inflation moving prodigiously close to the 6% mark. We would probably be in the 4 to 5% range. And in the past, if we have cut rates when inflation has been between 4 to 5%, there's no reason why the RBI should not be doing it. Unless, of course, the monsoon fails, we have this El Nino, we have crude oil prices spiking up. But right now, I don't think it looks like that we are so dangerously poised.
Brinda, room for a rate cut?
I think there's room for pause rather than a cut. We've moved into neutral territory now, and I think the Reserve Bank's concerns on inflation are all playing out right now, domestically as well as globally. So my own sense is that Reserve Bank would go for a pause right now, and later I would say maybe perhaps they would look at, because look at the output gap, that is also narrowing. So demand pressures are building up. On the supply side, things are becoming uncertain. So it's very unlikely that inflation pressures are going to go away anywhere. And so that would probably prompt the RBI to stay on hold for some more time.
Right. So Madan, just so that our viewers understand as well, we've been talking about the impact of global versus the impact of local on the economy, on the way interest rates move, on our cost of living. To what extent do you see global playing an important role or a significant role in coming months?
See, the global factors will definitely play a role when it comes to the WPI inflation number, because as what Brinda had been talking about, various metal prices where the price discovery takes place globally, or even crude oil for that matter, where we would have a direct influence coming in terms of how the WPI inflation number moves up. But I still feel that the WPI, when that number goes up, the manufacturing prices go up, it's more a kind of a benefit for Indian corporates and less of a burden for the common man. But if you're looking at a CPI and you're saying, do global prices really affect my CPI index? To my mind, it's very much limited, because we're talking of around 50% of the CPI being driven primarily by food products, which are indigenously determined, because unless we talk again again of a situation where sugar prices shoot up and we're able to import larger quantities at a higher price, which looks very unlikely at this particular point of time. So with food inflation, with the food component dominating the CPI basket, to my mind, global factors should not be affecting the common household, even if the prices move up. But definitely in terms of a policy prescription, for the policy standpoint, WPI inflation does also matter, though it's not the clinching factor, since we're back to be looking at CPI as the benchmark for monetary policy.
Right. So we've also crossed the threshold of demonetization and we are now in remonetization territory. So we've recovered most of the losses that, at least as an economy, that we saw in the period between November and February. So what's your sense? I mean, are we now on a stronger base to go forward? Are we building much more strongly this time around?
Absolutely. We've not only recovered the losses, we've also recovered the confidence. So I think this will give it a lot more strength to move forward from here. With remonetization, a lot of demand is also coming back into the economy, and with cashless movement, that also is picking up. So
right.
So on the demand side, we have a more streamlined and I would say a more better direction.
Right. Right. Yeah.
And on the supply side, also things are improving.
Right. Madan, last question very quickly. So in this remonetized environment, are we in a stronger position now for sort of economic activity and economic growth for the rest of the year?
Yeah, we're definitely in a stronger position relative to what it was a couple of months back.
So the period before demonetization, say the pre-November period.
Yeah, no, I'm saying the post-November period. Because a lot of good things which you're seeing today is more of a compensation for what was lost in the months of November, December and partly in January. So therefore we should be a bit guarded on it, saying that we may probably be going back to the equilibrium which was there in September, October, but not really passing that particular threshold to say that we're on the road to a very high growth rate. We need to see what happens in the next financial year, and a lot of it will also depend upon what the government does and how the consumption pattern pans out.
And last word, Brinda, so are you sanguine about the next quarter?
Let's also not forget that now there is more scope for doing reforms.
Right.
So I think that is one factor which will help to push growth forward.
Right. And that's something that we're going to talk about on our next segment. Thank you both for joining me. Well, we need to go in for a break now. Coming up on the other side, the government has won a resounding victory in the state of Uttar Pradesh legislative elections. What is business and industry expecting this government to do, particularly in the era of big bang reforms? Joining me to discuss that will be Ashish Kayal and Deepak Prem Narayan. Stay with us.
Here also we use the isotope technique to understand the source of water. So using the isotopic value, we can actually separate out how much rain you have got from the Bay of Bengal source, how much water you have got from the Arabian Sea, and how much water during the rainfall you have got from the recycling of the inland moisture.
Watch Eureka with Professor Prashanta Sanyal, Head of Department, Earth Sciences, IISER, Kolkata, on Rajya Sabha Television.
Welcome back to Policy Watch. The BJP has won a resounding victory in Uttar Pradesh, India's largest and most populous state. The victory gives the government considerable strength in pushing through with policies with both economic and other areas. The BJP's NDA government will have more seats in the upper house, the Rajya Sabha, which will give it more edge in legislation. But more broadly, what does this mean for the next set of economic reforms? What are the key areas that need addressing both on the regulatory as well as on the general policy front? And what is industry and what are markets expecting from this invigorated government in the near and longer term? To discuss this, I'm joined by Indian Merchants Chamber President Deepak Prem Narayan and Ashish Kayal, founder of Waves Strategy Advisors, a market expert. Thank you both for joining me. Let me begin with you, Mr. Prem Narayan. This is a resounding victory indeed. Now the question is, with this victory in place, with the government suitably empowered in future, what are the three things that you're expecting as headlines that in the coming months which will reflect or should reflect this optimism?
I'd say the first thing is infrastructure. Second thing I would say is the geopolitical scenario globally. And third, I would say, is in terms of the NPA issues that we have. Around this, if you take infrastructure itself, this is a massive low-hanging fruit. The government is fully conscious of this sector creating jobs, being able to bring in FDI substantially, particularly the INVITS launch which is there. But monies will only flow in if there are a couple of things. You take the aviation sector. Aviation sector today, the revenue is about 1.4 trillion and it's growing at about 12%. You take telecom, it's at 1.8 trillion but growing at 5%. It's a no-brainer that what's going to happen in the next 5 years and which will be a bigger one. Now for that to happen, there is almost $130 billion that minister wants to put in, the aviation minister and his Minister of State, Jayant Sinha. They've spoken about it over the next privatization of airports and launching of new airports. Now, this is over the next 10 years. And these monies are possible to come, but what it requires is a clarity in terms of whether it should be a PPP program or whether it should be private sector owned. I believe it should be private sector owned. Therefore, as a result of that, there will be clarity. Also, the selection criteria needs to be better here. So there is a low-hanging fruit.
Right. So overall infrastructure for which there is capital, use this new confidence to make sure that you can provide the directional input.
Sure.
Okay.
But I'd add two more points here, with your permission.
Yeah.
I think that if you, in infrastructure, if it is, let's say, railways for that matter, or more than that is roads, land acquisition needs to be distinctly sharper in terms of time frames. The other thing is that the entire process of bidding is incorrect today. L1 gets it. It shouldn't be L1. It should be a Swiss model for that matter if it's a new conceptualized project, which gives a chance to the person who is bidding and other party to bid also. And it gives the chance to the person who submitted the project to match the price. But what that requires also at the same time, let's say if I bid for a highway and it's just not building the road, I create an entire ecosystem around it. So you come with that plan of schools, colleges, laundries, shops, etc., hotels, so restaurants.
You see this working better now because the government is stronger at the center and of course in many parts of India?
I distinctly see this happen,
right.
But what I'm announcing today is that some of these things need to be tweaked because then it will happen faster, particularly this is they have the mandate.
Right.
Interest cost needs to be lower, arbitration process, although they have revamped that, but there also it needs, instead of just keeping 75% and the interest angle on it,
right.
But it should be time bound for NHAI or other government bodies to settle.
So I'm going to come back on cost of funds in a moment. Ashish, so markets have obviously been very positive. We've seen the Nifty hit a lifetime high. What's your sense forward? Now, I mean, has the market already discounted now what the win and is now poised to see what else is going to happen? Or, I mean, where do we go from here is really the question.
See, Govind, the overall trend for the markets have been positive, not just now, it has been positive for quite some time. And the rally that started from 7,900 was already probably discounting something like this is going to happen. A very, very interesting thing that I will point out is that in 2014 also, BJP had a very, very clear victory at the central election, but the rally in market started in 2013 October, November itself. So the markets were already rallying before the election time, and this was no different. Even it was a UP state election outcome, but the markets were already rallying before the election outcome, and probably it was already discounting smartly that something like this is going to happen. Also, one very interesting aspect is that after the announcement there was a huge gap up opening based on the fact that a clear majority and a clear mandate from UP is indicating that the upcoming elections after 2 years is going to help government to probably again come into power, and if that happens we are going to see some very, very golden era, I would say, because it brings stability for the year, not just for this 5 years, but it is going to bring stability for next 5 years as well, and that is what markets are discounting right now. Nevertheless, the PE ratios have been at the higher levels. The mid-cap PE ratios have been at the higher level, so that is definitely a concern, but markets are discounting good times ahead, and I think from long-term perspective, from 3 to 5 years or longer perspective, we are going to enter into a golden era.
So Ashish, I'm assuming when markets are high and this discounting is happening, there is an expectation that the government will continue to deliver something or deliver something more than what has already been delivered from an economic perspective. So what would that be in your estimation, Ashish?
Yeah, definitely. I mean, if this is happening, the expectation is definitely high, and this time markets are already expecting that the policies that were probably not being cleared and were struggling to clear. Even GST took so much of time. Going forward, any other new policies that the government comes out with is going to be cleared with a clear majority, and it's not going to take much of the time. The implementation and execution of the new policies that government is going to come out with is going to be faster than before, and that is what markets are discounting. So this is going to provide a very positive boost in terms of sentiments for the sectors like private sector banks, I would say, for sectors something like cement sector, because if the infrastructure spending increases, if the overall construction of roads increases, if the wealth distribution, the policies with the government coming out is taking away wealth probably from the people who are earning more towards the poor within the interiors, if that happens, then that is really going to boost the economy from the core, from the very agri space. So that is going to be very, very important observation that the markets are going to do over next 6 months, 1 year to 2 years horizon till the next election comes out.
Right, Ashish. So there are two parts to it. So one is the steps that are taken and the direction of reform. I mean, to use the word reform in a general sense, and the speed. So what you are saying, and I think what I hear Ashish also saying, is it's the speed that really seems to be giving everyone confidence that the speed will pick up and action will be taken. And as part of that speed, I'm assuming many of the hurdles that you've been pointing out, which are procedural in the area of infrastructure, would get resolved faster. Am I correct?
Yeah, absolutely. I'm hoping much on that front.
Right. So if you were to now look forward, what is the bigger bank expectations from you economically and for business?
As I said, that because of infrastructure, if it comes into play in terms of business, what it will do is that the number of jobs it would create. You take, for instance, just one airport, what it does, you take globally, you take the Heathrow Airport, almost every Fortune 500 company is within 20 miles of Heathrow Airport. So if the new Mumbai Airport, which the older one took a long time to come, but with this change, there is a land issue which is there at Navi Mumbai, for instance. And if that happens much faster, that's going to add tremendously to the local economy. So that is one.
Right.
The implementation, therefore, as I said, land acquisition, smart cities. And that's a thought that the Prime Minister has been very keen on, what that would do in terms of job creation, and again, in terms of adding to the economy. So that's the big bang. I would focus, because these are low-hanging fruits, is an issue in my mind, because the IP shifted from economic affairs to corporate affairs. Corporate affairs doesn't have the IP. So what it does is that the tribunals have become more like courts. And the very purpose of bankruptcy code is not going to be there. So execution, government has taken some fantastic steps over the last couple of years. As my other friend also said about GST, GST now should happen. And it's there. Instead of 1st of July, it may happen on 1st of October or 1st of November. And there has been a lot of adjustments on that. So GST I'm not referring to. GST is of course, but there is going to be a whole lot more in terms of indirect tax collection. And it's a process that had started with demonetization, for instance. People who had never paid tax before have now got onto the system. So overall, with that surge of transfusion that will come into the banking system and with the government, its hands would open more and Aadhaar will become stronger. But these are existing programs. So I'm not looking at any, but to me another issue which is important is the geopolitical, which I mentioned. And I think with the world becoming protectionist and with the economies globally shrinking, you take Europe, the growth over the last few years has been about 1.25, 1.3%, whereas ours is now hovering around 6.7 or 6.8. Now for us to prosper, what we have to do, we got to enter, and this is the opportunity, the bilateral arrangements, which are there, but we need to work closer on that. So that is, as the CEO of the country, that is a program which is there for him to work on and partner closer in terms of economic development, because that's not going to happen with Europe for that matter.
Right. Okay. So Ashish, if you were to look ahead, would you say that the government or the government as a factor in determining the direction of the market is not really going to be an issue in coming months or maybe coming years?
Definitely going. I think the actions and the steps that the government will be taking in near future is going to be faster, and the execution is going to be in a much efficient way, which is going to definitely help the overall economic development. This is in turn going to help prosper the profitability of the companies. The capacity utilizations are going to be much better than they are currently, which is very, very low as of now. The overall business is going to pick up. So what has happened after demonetization? There were a lot of skeptics that probably Honorable Prime Minister might be losing out its shine, but this clear victory clearly showed that majority of the people are still extremely optimistic about the way he has functioned, and the outcome of demonetization might not be completely met, but it has still pointed towards digital India and the way companies are going to function. So it's going to give boost to the infra, it's going to give boost to the IT sector as a whole, and the private banking norms as a whole. It's going to provide very, very efficient way. So I think banking, auto, IT, and these are the sectors that are going to be the major beneficiary going forward, and when these sectors outperform, nothing can stop it.
No, I just want to say another point is that it's important to address the NPAs, because this is the time for it to clean up, because with this strong mandate that it has, and these NPAs are affecting the valuation of our banks, and we've been advocating as a chamber that there needs to be a good bank and a bad bank, and that is something now which has started to be debated, because that's very critical. You take away the bad and the rotten eggs, otherwise it's going to affect the entire basket itself. So once you segregate that, the valuation of the good banks will go up, and we require about $300 billion to come in terms of meeting up with Basel III requirements. With NPAs today, which are in double-digit numbers, you don't know the exact figure, it could be about 17, 18% also. With that level, so that needs to be cleaned up very soon, because what that will do, when you require the monies to come in, there will be transfusion that will come in terms of equity and debt for those institutions. So that will create, so that ability is there today, and I would focus on that too.
Right, we've run out of time. So speed, the direction is fine, the actions that have been taken so far is fine, but speed is really the essence, and speed is what the expectation is from industry and markets from this government to deliver. Absolutely. Now that there is a clear and resounding majority. Thank you for joining me. Thank you, Ashish. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.